$11 billion for Confluent. IBM is literally just buying their way back to relevance.
Oh, come on, it's a brilliant data play. Confluent is the absolute crown jewel of streaming infrastructure.
It's a panic buy, just like Netflix scooping up Ben Affleck's AI filmmaking startup.
Wait, you don't see the vision? Batman meets machine learning. That's pure synergy.
You sound like a parody of a pitch deck right now.
I know, but it felt right. Let's pull up those IBM footnotes because Alphabet just fired back with $4.75 billion. The rundown. I just can't get over Grab paying $600 million for foodpanda's Taiwan unit. It feels like a massive distraction.
I completely disagree. It's a critical strategic pivot. This is literally their first foray outside of Southeast Asia. They maxed out their core market and need growth to justify the valuation.
Right, but Taiwan is a brutal market for delivery. Uber Eats is already heavily entrenched there. You're paying $600 million to enter a knife fight.
Grab knows how to win knife fights. Look at how they boxed out Uber in Singapore. Speaking of boxing people out, Trian and General Catalyst are throwing their weight around. $52 a share in cash for Janus Henderson.
Best and final offer.
Oh, I hate when they put that in the press release. Best and final. It's never actually final. It's just corporate theater.
Spoken like a true skeptic. But Victory Capital walked away earlier this week. Trian is just drawing a line in the sand. When you're an activist fund, you want the board to know the auction is over.
I read the filing. The premium is barely 20% over the 30-day moving average. If I'm sitting on the Janus board, I'm holding out for 55.
And you'd hold out until the deal completely dies. Sometimes $52 cash is just $52 cash. Take the money.
Well, Warburg Pincus is spending money on a highly specific target. They're nearing a $217 million deal for Maneesh Pharmaceuticals.
But only the non-tuberculosis drug business.
Which is exactly why I love this structure. Carve-outs are always messy, but they drew a fence around literally everything except the TB unit. I looked at the historical financials, and the margins on the non-TB side are incredibly stable.
Classic private equity play. Buy the boring, predictable cash flows. Leave the complicated infectious disease pipeline behind. You want to talk about scale, though? Warren Buffett is over in Japan printing yen. Berkshire Hathaway is pouring 287.4 billion yen into Tokyo Marine.
Which is roughly $2 billion once you do the conversion.
Don't ruin my massive numbers with exchange rates, Maya. 287 billion sounds so much cooler.
They're officially collaborating on global M&A. Berkshire just wants to leverage cheap Japanese debt to fund more acquisitions.
It's the ultimate infinite money glitch. Borrow at almost zero, buy assets yielding 5.
We'll see if Berkshire starts looking at tech targets next, because right now big tech is completely eating itself alive.
Oh, you mean the $11 billion elephant in the room?
Exactly. IBM just swallowed Confluent whole, and the footnotes on how they structured the streaming data rights are absolutely wild. The big one. So $11 billion for a data streaming company that, frankly, was already trading at a massive premium.
But they had to do it, Maya. IBM is looking at their cloud infrastructure and realizing they are essentially selling empty pipes. Confluent is the water.
$11 billion for water. I read the 8K this morning. If you look past the synergy projections, which are always pure fiction, IBM is paying a terrifying multiple here.
Okay, yes, the banker in me knows exactly how those synergy models get built. You just drag the Excel cell to the right and add 20%. But strategically, this is a survival play.
A survival play that happens to coincide exactly with Alphabet quietly closing their $4.75 billion deal for Intersect, which, by the way, got completely buried in the news cycle because of this IBM blockbuster.
That is the ultimate M&A flex, dropping a near $5 billion acquisition and letting it ride the B block of the news because Big Blue decided to empty their wallet.
My issue isn't even the tech. Confluent is great. It's the integration. You take a fast-moving tech company and you shove it into the IBM corporate labyrinth. We have seen this movie before. They are going to suffocate it.
I strongly disagree. Arvind Krishna is not running the IBM of 2010. They actually know how to leave a good thing alone now. Buying Confluent is like a 50-year-old buying a Porsche. You don't take the engine apart, you just want people to see you driving it.
Wait, are you calling IBM a midlife crisis tech company?
I am saying they bought relevance, and 11 billion is the going rate for relevance these days.
I just do not buy the massive tech consolidation narrative everyone is spinning today. The headlines are screaming that tech M&A is back. No, two companies made defensive buys. That is not a wave.
Oh, come on. When you have nearly $16 billion moving across two tech deals in 1 week, that is a wave. The window is clearly open. Look at the broader market. Public storage is dropping $10.5 billion to swallow national storage affiliates. Grab is spending $600 million to buy foodpanda's Taiwan business. Deals are closing across the board.
Grab is actually interesting because it's their very first move outside their core Southeast Asian market. But sticking to tech, you really think regulators are just going to let big tech consolidate again?
Alphabet just proved they will. $4.75 billion for Intersect is not a small tuck-in. That is a major platform play, and they finalized it.
I guarantee you there is a junior lawyer at the FTC right now meticulously highlighting that Intersect merger agreement. They are not out of the woods.
We will see. But if you think IBM was paying up for a makeover, wait until we talk about the beauty sector. The gossip out of Spain right now is absolutely wild.
You are talking about the Estee Lauder and Puig rumors.
Exactly. And the stock charts are already going crazy. Voices. I saw that quote from Trian this morning, and honestly, I almost choked on my coffee. Calling $52 a share their quote-unquote best and final offer for Janus Henderson.
Why is that funny? Victory Capital withdrew. Trian and General Catalyst are the only ones left at the table. It's literally their final offer because they're just bidding against themselves at this point.
Oh, Maya, come on. You know as well as I do that best and final in this business just means best and final until the board actually packs their briefcases to walk away. It's pure posturing. Classic banker anchoring tactic.
Not this time. I read the amended Schedule 13D. They structured the financing commitment with a hard stop. General Catalyst doesn't play bluffing games on public market take-privates. $52 in cash is a massive premium to last quarter's average. The board needs to just take the money.
We'll see who blinks first. I bet they find another dollar in the couch cushions. But speaking of big quotes, the market commentators are going crazy over Grab. They're calling this $600 million buyout of foodpanda Taiwan a critical strategic pivot.
Because it is. It's their very first expansion outside of their core Southeast Asian market.
Is Taiwan really a massive pivot, though? It's geographically right next door. This feels less like a grand strategic masterstroke and more like buying market share on clearance because Delivery Hero is desperate for cash.
You're completely ignoring the unit economics. foodpanda actually has user density in Taipei. Grab has been bleeding cash trying to optimize their home markets. Spending $600 million for a mature slice of Taiwan is the smartest capital allocation they've made in 3 years.
A delivery app buying another delivery app is just trading one headache for a slightly more northern headache.
You just hate food delivery businesses.
I hate businesses where the primary competitive moat is a 20% off promo code.
Fair point. Well, if you want a business with an actual moat, the beauty world is completely losing its mind over this Estee Lauder rumor.
Oh yes, the potential family drama on a Pug deal is going to be spectacular. Spill the tea. I'm telling you, the luxury beauty whisperers are working overtime this week. Estee Lauder and Puig.
The stock pop for Puig was insane. But look at Estee's balance sheet right now. Are they really in a position to swallow a massive Spanish fragrance house?
Absolutely they are. It's a classic defensive move. You buy the cool European brand to distract from your own sluggish quarterly numbers. I used to pitch this exact strategy. We called it the shiny object maneuver.
Okay, I actually hate that. But the math on a Puig tie-up feels messy. They literally just went public. Why sell now unless the internal projections are terrifying?
Or the premium Estee is dangling is just that good. Speaking of dangling premiums, Trian is officially out of patience.
Oh, the Trian and General Catalyst letter. $52 a share in cash for Janus Henderson.
Best and final. You have to love the drama of a public best and final declaration, especially right after Victory Capital quietly backed out of the room.
I read the filing. The phrasing was incredibly passive-aggressive, but $52 feels light to me. Janus has been restructuring and cutting costs. If I'm the board, I hold out for 55.
Oh, come on. You don't play chicken with Trian when your only other bidder just walked away. You take the 52 and you smile for the press release.
I guess we'll see who blinks. Wait, did you see the Merck rumor that dropped this morning?
$6 billion for Turns Pharma?
$6 billion for a clinical stage pipeline. That's a massive premium even for cancer drugs. The desperation for patent cliff replacements is getting palpable.
Big Pharma M&A is basically just buying expensive lottery tickets at this point.
Fair. Speaking of expensive lottery tickets, we need to talk about Ben Affleck.
I never thought I'd hear those words on this podcast.
Netflix is apparently buying his AI filmmaking startup Interpositive. We've got the tech breakdown on that, plus IBM's $11 billion data grab coming up next. Tomorrow's radar, the Telemat One Kuro Clunkit.
I'm clearing my entire morning tomorrow for the Netflix regulatory filings.
For the Interpositive deal,
Obviously, I need to know exactly how much Netflix is paying for an AI filmmaking startup founded by Ben Affleck. It's the ultimate Hollywood tech collision.
it's a total vanity acquisition. The actual drama tomorrow is the Trian and General Catalyst offer for Janus Henderson.
$52 a share, cash.
They called it their best and final offer. I read the release, Nate. They're daring the board to reject it now that Victory Capital walked away.
Oh, come on. It's a classic banker bluff. Best and final usually means best and final until we find another $2 in the couch cushions.
I disagree. The wording is incredibly defensive. While you chase Batman's AI side hustle, I'll be watching the footnotes on Sony finalizing that $1 billion home entertainment joint venture with TCL.
Hardware joint ventures, you really know how to party, Maya.
Somebody has to read the fine print. We'll see who's right when the markets open tomorrow.